Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the gold futures chart. Before I start today's video, anyone who's interested in joining my trading team and receiving my personal trades that I post over on my private Telegram group chat, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's YouTube video. But let's get started here with the gold chart. Gold currently trading at 2,320. A very negative day today. We're down 1.7%, basically pairing the gains that we saw during yesterday's session, where we did go as high as 2,364. In recent videos, I did say that if we could stay above the 50-day EMA, then a push up towards 2,400 might be on the cards, but we failed to break above the area of resistance that we tested back on the what we created back on the 7th of June. So with that being the case, all of a sudden gold's looking a little bit vulnerable here. We still do have support offered by the 50-day EMA and the neckline of its potential head and shoulders pattern. Is in my opinion that we might be in a process of forming this right shoulder. The fact that we didn't break above the previous area of resistance back on the 7th of June tells me that we are still probably in the build-up of pushing that one step further up towards 2,400 to create this right-hand shoulder. But of course, the head and shoulders pattern is typically a bearish pattern where you do ultimately get a breakdown towards the 200-day EMA, which sits all the way at 2,166. I think that would make a lot of sense. Even from the gains that we've seen since the 14th of February, if we were to trade up towards the 200-day EMA, that's still 8.55% of returns here for gold charts. Obviously, it's not as attractive as 17%, what we're currently trading at right now, but I think it definitely would make sense to do some back and fill in here. If we just do a peak to trough fib chart, obviously if we went down to a 200-day EMA, that takes us down to the 0.618 fib extension. That makes a lot of sense. Again, so 2,160, this would be an area where I would be very bullish on gold because long term I do like it. The US is in a record amount of debt of $34 trillion, and I think that gold is a great hedge. To be invested in if you feel that one day the US debt is going to be a problem, which ultimately, in my own humble opinion, it will.